What's up, guys? Welcome to the weekly forex forecast. After the week where we saw the inflation data in the US showing mixed result, while the CPI is improving on the annual read to the 2.7%, the PPI surprised with much bigger data, much bigger numbers than expected. That puts the pressure on the market, that put the pressure on the Federal Reserve. Will they be able to cut the rates on their next decision in September? That's the biggest question the market is trying to figure out. Will the Fed be able to actually do it? As we know, the pressure on the Federal Reserve is huge. Everyone expects that, especially with the US President Donald Trump putting the pressure publicly. The market is trying to figure out what's coming next. With this idea in mind, this week we have important data around the world, and if the focus is going, of course, the CPI around the world, we have the raise decision in New Zealand, but also very important to pay attention to Powell's speech this week, and we had the Jackson Hole Symposium. What's coming next in terms of our trading opportunities? Let's start with the gold. The gold continued to move inside its daily, weekly triangle. We are still moving within this range, and the biggest question remains here: will the gold be able to make a final spike to the upside before it turns down, or will this break that we saw below these two lows and the retest and the rejection will open the doors for the gold to begin the next journey to the downside? So let's take a look on that from a technical perspective on the lower time frames. Why from the lower time frames? Because if we go on the higher time frames, the picture did not change from the recent weeks, and we still are at the overbought conditions, which makes me think it's only question of time until the correction is coming. It's either from here or with one more fake rally. The weekly scenario is not any different. After bouncing off these overbought conditions, we do expect to see corrective move to the downside. And the corrective move to the downside many times begin after such ranges where we see the slowdown and then suddenly gains the momentum, or with final fake rallies before it makes the move to the downside. But that's from the higher time frame. On the lower time frame, very interesting from my point of view observation is here. This was the daily trend line, which managed to be broken, right? Goes back inside, but now bounces back to the downside. That's a great sign, usually, that the sellers manage to take control. However, what to pay attention to, in some cases, such scenarios are used as traps, because the big guys, they know these kind of things that we know, so they might setting up a trap. Lots of sellers will try to make the push the bottom for the sell. They make some drop to the downside, maybe even clean a low, right? But then the rally begins, especially when we have a bullish divergence on the histogram and the moving average and the RSI. So what to do on gold? Due to the higher time frame overbought conditions, I am at the moment after sells, and for me, I am looking for regained momentum. Meaning, for example, look at that case. We got the higher highs, higher lows. We got a bearish divergence on the moving average of the MACD, and this low was broken down here. So now what happens with the gold? We restart the bearish momentum. So if it managed to break this low and maintain the bearish momentum, and what is a very important thing for me, that we have the synchronization between the price action and the indicators, which will indicate if both go down, then the momentum is bearish for real, and we can look for the sell. So from my point of view, for the gold, as long as we have this dynamic falling resistance line, and as long as this vertical, and as long as these horizontal supply levels we manage to hold, I believe gold has all the reasons to push to the downside. However, if this becomes to a trap, as I mentioned before, and we start to see the gold breaking highs, right? Imagine We get this high broken, we got the trend line broken, we got the next trend line broken. That gains the momentum, and then I do believe gold will build out, prepare the ground. Imagine something like that. Let me just draw it for you here. Imagine something like that happens, and it starts to break through the trend line, through the range, right? And then it builds up the something like that. Until, and that's very important, because remember, the higher time frames, they are on overbought conditions. It's a question of time here until a significant retrace takes place. So if we manage to get that done with higher highs on the chart, lower highs on the MACD, that would be our big call for the next round of sell. Our next one for this week, the S&P. After completing another high on the last week, while the market starts to get excited that the CPI is dropping, we saw some a little bit discouraging data coming in the second part of the week. We saw the PPI disappoint, and the retail sales read was that the retail sales shrink as the analysts expected. What does all that mean on the market? So the long-term momentum is yet to decide what's coming next. On the short term, though, the pressure to the downside starts to build up. While the market managed to make its series and sequence of higher highs, higher lows, MACD is telling a different story, that we are building up a bearish divergence. Usually, that's a sign that a correction is coming, or at least that the buyers are losing their grip. And the coming weeks usually should be under a bearish pressure. So what do we have here? Higher highs on the chart, lower highs on the moving average of the MACD, and now the RSI starts to build up the same picture, which duplicates the bearish pressure from the indicator perspective. If we take a look on the higher time frame, not because we are going to trade it, just to understand where we stand, higher time frames also have the same picture at the moment, with the potential moving average divergence and histogram divergence building up. But that's for the very long term. Also, the weekly chart has its own potential divergence, but the thing here is the shorter term, like daily chart. And here it is very obvious. So I do believe that the S&P on the coming weeks is going to build up the corrective move to the downside. To try and to time that, here is what I usually love to do. The ideal scenario would be if the 4-hour chart managed to break some false breakout. That would be classical. Why? Because we have the higher time frame bearish pressure divergence, and then false breakouts, false highs, fake highs to be created on the lower time frames usually represent the traps that the sellers are building for the new buyers, those who actually missed the fun and the previous rally. So in that case, we want to see attempt to break to the above the last high, fail, and look for this scenario. If you get higher highs on the chart with fake high and false breakout, and lower highs on the moving average of the MACD, that's a sign to look for the sells. The next great technical sign would be if after the divergence we start to make the reversal signs, meaning if we break the low and look at this amazing trend line, if we manage to get that below the trend line and starts to make lower lows, then it is the bearish call. And as long as this scenario did not happen and the reversal did not complete, the pressure is bullish. The buyers are yet in control. But usually, that's why I show you these bearish divergences. Pay attention to these signs, because that's a sort of a way of a market to tell us, get ready for possible reversals. Okay? Many traps are being set when such conditions from higher time frames appear. Lots of people who missed the rally before and now they're trying to catch up and make sure that it's not too late. Many times they fall in these traps, they enter too late, and again, the big guys, they know these things, and they might set a trap before the correction takes place. So watch out for the technical setups as we discussed. And the next one, how can we skip that, right? The euro dollar. All the eyes are on this pair as it represents the opposite, I would say, or the mirror picture to that dollar index. With over 70% of transactions going through this pair, no surprises. So what is happening on the euro dollar? On the weekly chart, we do have our sequence of higher highs, higher lows. There is no changing momentum, which means theoretically the euro still has the room. And I to believe that the euro can actually make this final rally. However, there is a big however here. The euro is now retesting the broken support that now acts as a resistance. There is a sequence of the highs here, of the supply levels, high here and high here. Okay, so with that idea in mind, of course, the pressure of the 120 as it holds below, the pressure is significant. With this idea in mind, the euro dollar has usually two scenarios to follow in that case. The ideal one, right now we have the sequence of higher highs, higher lows, and many times it completes another rally to retest the trend line, the uptrend line. That means we can expect the euro to reach the 120, maybe even beyond that, 122, 123, under the same cycle, under the current bullish cycle. For that to happen, we will see the euro making the high and then bearish divergence on the moving average of the MACD completes the final peak before a bigger significant retrace will take place. Okay, so for that, here is what I would want to see. The break above the daily trend line, come to retest that, get the rally towards the trend line that connects the peaks on a daily chart. Okay? That would be the classical bullish scenario. And on the 4-hour chart, you can see that in some clearer light here. Sequence of highs and lows. If we manage to get this breakout, right? Watch out for the retest, maybe even deeper, because in such cases, as we know, the retest is not always, I would say, perfect, right? And then look for further bounces for the rally towards the 120, 122. However, as long as this peak holds and the supply level holds here, and the trend line holds, of course, there is a second scenario. What do I mean by second scenario? As we saw, the daily already built the bearish divergence. Okay, that means a correction could take place. Correction could take place means ABCD or a range. We already experienced some ABCD, right? It could also, of course, turn into some horizontal range. That means we could start look for the sells if these peaks manage to hold. And if we go to the 4-hour chart, okay, for that, we would want to see the euro making a sequence of lower highs, lower lows to break the previous low. If that happens and the euro restructures, because right now we are in sequence of higher highs, higher lows here, right? If it managed to restructure that and basically get it below the recent 4-hour chart swing low, making the lower highs, lower lows, look to sell these rallies. That is the trading plan of mine for the euro dollar this week, both for the buys and for the sells. Don't try to predict what the market will do. Try to stick to clear plan based on the price structure, official swing highs and lows, and of course the waves. And the final one for today, that would be the pound as well. Take a look where the pound stands. On the higher time frame, we have the sequence of highs and lows as we can see in these bounds since 2022. And at the moment, there are no signs against. Higher highs on the chart, higher highs on the indicator, all good in the pound dollar wood. So what is coming next? I believe the pound dollar for the longer run has all the reasons to climb higher. With this idea in mind, I do expect this cycle to continue until the weekly would show opposite signs. And on a daily chart, we got its 3 waves to the upside, or even more than 3 waves. We got some correction here as ABCD, and now it attempts to break it to the upside. With retraces here, we can look for these rallies until this cycle here would actually complete. So the bullish scenario is we got the break of the trend line. If we go to the 4-hour chart, you would see here some sequence of higher lows without any opposite signs. And this is the daily broken chart or broken ABCD trend line. In that case, I'm redoing this part. So we go to the 4-hour chart, the daily trend line was broken, sequence of higher highs built on the 4-hour chart. Buy retraces could be the classical thing to do. Let's put some rectangles here for the levels. What are the key levels we have on the pound? Of course, this mini range and the current high. So you have this high and this mini range before the buyers to control as the first key level where we could look for the bullish continuation. The second key zone is actually slightly lower, connecting the lows of the demand, right? If in this downtrend, that's the key low as up as the demand, that's a key low for the demand, and of course this range before the buyers took the control is included. That's the second zone for the pound dollar buys. Okay, so this is from the bullish scenario. Could that be just a trap? And based on a daily chart, we are going to see the bearish continuation here. The answer is absolutely yes. How to be prepared for that? Let's take a look where the pound dollar is at the moment. Key supply level high, right? High. All holds and all is respect. Many times in such cases, the preparation is just for the next bearish wave. This scenario is more than possible. If this zone managed to hold, what I want to see on the pound dollar is either some lower lows, lower highs here with retraces and continuation to the downside, or some false breakout here, bounce to the downside, completes higher highs on the chart, lower highs on the moving average of the MACD, break the recent low and the recent trend line, and then look for the sell. If this is the scenario that actually takes place, then look for the pound dollar to complete here a deeper ABCD to the downside on the daily chart, or at least starts to move within this range. Okay, so that's the complete trading plan for the pound dollar for the coming week. That would be it for this video. I hope you find value in the trading opportunities. Don't forget to hit this like button and to subscribe to this channel if you do. I wish you wonderful trading ahead, and I'll see you soon with more. Bye for now.